If you cannot, can you hear me? If you cannot hear me, please let me know. So good afternoon. Can you hear me, please? Can you? Oh, the speaker is... If I 1 minute. If I 1 minute, so I think my speaker is not working. Okay, is it working now? If you can hear me, please let me just know if you can hear me, please. Can you talk if you can hear me? I am talking to them if they can hear me, that they should, please. Okay, I'm not muted. I just want to know if they can hear me now. Yes. Hello. I need this thing should be moving. It's moving. Okay. All right. That's all. Okay.
If not, it's triggered about power.
So good afternoon. Please signify before I continue if you can hear me. If you can hear my voice, please signify before I continue. There is a whole lot to talk about. Okay. You can hear, right?
So correct. Maybe I need the money. I was more.
So before I continue, please, I want to be sure that you can hear me before I continue, please.
I can hear you, sir.
Okay, that's good. That's good. Now, why people are not successful in forex? I think somebody is trying to join, and at the same time, the thing is going off. I hope that person links back before I continue. I talked about price action and the kind of candles that we look for. Now, this particular this one is a candle now. If you look at this candle very well, if you look at this candle very well, this candle has a body, it has a wick, and it has a small head. These are good price action that will tell us if there's going to be a reversal. Likewise this, but we don't just use the candles anyhow. We use them at some point, you know, of fib level or important support and resistance. And that is why we make use of them. Like this is a 4-hour chart. If you see them on if you see them on a daily time frame or weekly time frame or monthly time frame, the higher the time frame is, then the more significant or powerful, are the price action. So price action, this is like an armor. So the way it is, it's very strong when you see it. And I need to show you all this. Let me see if I can see other examples. There are examples that I asked you to. Now, if you in the middle of any trade and you see this kind of a candle, you can see that it's completely fully formed. Yeah, little bits here at the top here, they're little weak. When you see this candle anywhere, it means that price is still going in the direction that it's going. So, but if you look at this one, you can see this candle and immediately you saw this one, you think they're going to reverse. They're not reversing. When you see the formation of this candle will tell you that price will still continue to go high. So what they now did with this is just a pullback. And after the pullback, they will fake you here, a consolidation mode. And after consolidation mode, they move higher. Now, when you see a candle like this, also, it does not mean that the price is ready to reverse. We'll be looking at these candles and how we interpret those candles. Now, when you see a move like this also, and something like this in the middle, you might think that, oh, price is burning out and they're going to reverse, because this is like a correction. Price fell sharply and price now slow momentum downward, and you think it's going to go back. What you saw was that price went down back again before this move. But anything you want to do, you have to look at price on the higher time frame first before you say, okay, before you can validate what you are seeing. Now, looking at this, this is DXY. The DXY will tell us what the direction of the dollar is. I'm still waiting for more people to join us. Some people are really having it difficult joining. I don't know why. I don't know why. It is very important for us to know what the price is doing. Before you say you are plugging into any trade, you must know what the price is doing. This is DXY now. The DXY is dollar strength, is all about dollar, the strength of the dollar. That is what it's talking about, the DXY. So if you want to understand what is going to happen to these, let's switch to, this is a 4-hour time frame. In the 4-hour time frame, what we can see that this thing is doing is that is in an uptrend. So the price moved forward here up to this level, then it consolidated in the middle, a bit went down, move up, and this kind of a move. This kind of a move that you see here, this is what we call correction. This is what we call correction. So the price had moved a consolidation, then price went down, move up again, and all this. These are just corrective moves, and the price again soar a bit higher. So these are corrections on the 4-hour time frame. You can't just say that, oh, the price has been buying, so it will continue to buy. Anywhere I join the price will continue to buy. You can't say that. It will be wrong to assume that price will continue to buy because you feel that anywhere you join it, it will continue to buy. For instance, look at this place now. If anybody joined the price here and you've been buying and you felt, oh, price is doing this, and because you are emotional and what you want to do that, price is going down again, you don't know where the price is going to do. So you exit here and you think the price is going to continue to go down and you want to sell, price move backwards, upwards. And after that, you got in here again. You said, okay, you want to buy from here. When you now decide to buy from here, price consolidated and move downward. This move in itself from here to this point is enough to blow your account. These are the things. So we need to understand what exactly the price is doing. So if you measure the move from here down to this place, that is over 200 pips. So it's enough to blow anybody's account. So that's why we need to understand what price is doing exactly. What I try to do is we try to look at higher time frame to understand what is happening. So this is the daily time frame on the DXY. This is the daily time frame on the DXY. These are examples of price action that anybody can look for. When you see this move and a doji and this move, this is what we call it an evening star. Evening star is supposed to send the price downward, but you must know when they are formed, which level are they forming, then how low can the price go? Are they going to send the price lower than here? So you have to know. You don't just take them like that isolatedly and say, okay, yes, it's a reversal to where? So you must know when you are engaging this. But these are examples of price action we will look for, which is a morning star. When the cross here is here, and it means that the price wants to go up. So, but at this level now, you can see them. So this is just correction that you are noticing, corrections. These are corrections that you are noticing at those levels. Now, but what exactly is going to happen to the dollar? That is what we need to know. For those that have been teaching on price action, this is the weekly time frame of the dollar. So you can see that the price of the dollar had been falling. It fell to this point, and all of a sudden, price now began to move forward. Where is this thing heading to? We must know where it's going to end to, you know. And even if the dollar has been getting strong, when is it going to get weak? And the understanding of this structure that we're looking at will tell us when, you know, it's going to get weak or not. So if we try to zoom out, let me say zoom in, and we try to put a trend support for this price. To draw a trend support, we can go up like that to draw a trend support that the price has not been able to break below that. That is a trend support. That is a trend support that price had not been able to break below that. Now, in terms of wave, this is where it gets tricky, you know, because I'm still going to discuss yen pairs with us and what we should expect on yen pairs. This is where it gets tricky in terms of wave analysis. This is where, and I want you to really pay attention to what I'm doing here. I'm on the weekly time frame. This is where it gets tricky. You see the price moving from this level up to this level. Let me try and bring something out. Now, price at this level, okay? So you can see the level at which we have the price at that level. But then price initially did something. Watch this area, this low area. Price falls a touch here before pushing up. We have to watch this area. So I want you to pay attention. In that region, this is the first region where the price is making a move, and this is another region. So when you say price is going to move, we talked about 5 Elliott waves. We said wave 1, wave 3, wave 5, they are what? They are usually impulsive. That means they move more or less in a vertical line. Now, the wave 2 and wave 4, they are corrective. They undergo correction. So more or less a sideways movement like you will see here, a sideways movement like you will see here, a sideways movement also here like you will see here. That is what we expect on wave 3 and wave 4. It's only wave 3 and wave 4 that will give you that. Wave 1 will give you a sharp movement up like this. Then this also might represent also the impulsive wave, which we will see later. Now, what exactly is happening on the DXY? We need to look at it. But first, I want us to look at this wave. If we say this is the beginning of wave 1, and we say wave 1 now ends here, we are telling ourselves that if wave 1 ends here at this level, if wave 1 ends here, we are telling ourselves this is where wave 2 stops. We are telling ourselves this is where wave 2 stopped. And I want you to pay attention to it. Now, this is wave 1, and we said wave 2 stopped here. And this is the lowest the wave 2 had done before a breakout of wave 2 into a like 3. Now we can now say that, okay, the 3 had gone up. We can tell ourselves, this is where it gets interesting. We can tell ourselves that this is where wave 3 ends, and we can say, oh, this is wave 4. I want you to pay attention to what I'm doing. We can tell ourselves, this is wave 4, which means that wave 4 ends here. Is it like that? We'll see. And we're not telling ourselves this is the last wave. Is it that we are seeing wave 5 or not? Okay. No, I'm trying to break it down for us to see. I'm trying to break it down for us to see. And this is where the price is at the moment. That's the why price is at the moment. Now, is this wave 1? Is this wave 1? Is this wave 1? And if that is wave 1, we are telling ourselves again, is this wave 2? So if price stopped there, is it the end of wave 2? Now, again, we are telling ourselves, is this wave 3? You know what to do. Once it's 45 minutes, just log in again. That's what we do. 45 minutes, just log in again. You link up again. Is that wave 3? Now, we are again telling ourselves, Is this wave 4? Is this wave 4? Then we are telling ourselves, now are we in wave 5? If you are not careful, all these things will look what you think it looks to you. But then we have to validate if this, what I'm looking at, is what it is or not. Now, we said wave 1, 2 will be a retracement of between 50.0 to 85.6. So if we take this retracement 2 and we put it here at the beginning of the wave, and we come to this end, where wave 1 ends, it is at what? 0.5. So which will still agree with wave 2. Now, is this wave 3? Is this wave 3? If it's wave 3, it means that from here to here is 3, 1 of 3, and 2 of 3 at this level. It means that this is 3 of 3, and this is 4 of 3, and the 3 ends here, maybe 5 of 3, and wave 4 ends here. Are we seeing wave 5? Or is this particular one wave 3 of 3, and this is wave 3 of 4? So we need to see. We need to see. We need to see. So, and we need to pay attention to what is happening here. So if that is the case, we would expect that if this is wave 3 and this is 4, we would expect that wave 5 should not extend beyond 161.8, which is around this area. Let me just mark it for you. I want you to pay attention. So we don't expect price to go beyond here. Let me use red. If that is wave 5. So now, if you look at it, these are pierced these. So once it has pierced wave 5, where once it's 1.8, it means that this is still, you know, an Elliott is still going further. So it has validated. So this cannot be wave 5. That is what this has shown us now. This may be correct as 1 and 2, and 3 and 4. Even we need to validate that this is 4 by putting this from 2, from wave 2, origin of the end of wave 2 to where wave supposedly wave 3. So this is 0.3 and 0.5, where this one still qualifies as wave 4 in a way. But looking at our wave 5, it has gone ahead to break this. So this is how anybody can be fooled in forex, and you will miss what exactly is happening. You will miss what exactly is happening. Now, because we'll tell ourselves, once we get to wave 5 of the DXY, price should be breaking down and be falling. Is that what we are going to see? You don't just take a wave isolatedly. You don't take a wave isolatedly and begin to count internal structure of wave 1 to 5. You don't do that. So what we do on the higher time frame first is we can even switch to month. Let me switch to month because the month will be more accurate for us. Now let's switch to month. Now switching to month, we can see DXY very well, switching to month. So from this move down, when you have this move, we can say we add some structure here that looks like an Elliott. This might look like a wave 2, a wave 1, a wave 2. And usually we said wave 3 is the longest. So you can see the way this wave had gone up so sharp. And so with this one represent wave 3 indeed. And after 3, we add 4 correction here. Can you see 4 correction here? And this is wave 5. So which is true? For DXY in this regard, from this move, I want you to pay attention, because if you don't understand this one here, you will not understand what is happening in this place. And you don't know what is going to happen next. So these, for me, these are corrections here, but then this wave started to move forward, and this is like a wave 1 and wave 2 in the middle, wave 3 and wave 4 here, and wave 5. And after wave 5, we had this first fall. We had this first fall. How do we now decode what is happening here and what is going to happen? It is very important to us to know what is going to happen here. Now, how do we know? Now, I have to take some lows now. I have to take some lows and some highs. With this, once you understand this, you will not be the same. And by the time I now begin to go deeper, this is the first eye here. That's the first height. That's the first height. That's the height. And this is the low. This is a low. So it is the higher time frame that will guide us. If we don't understand higher time frame, then we'll just be misbehaving. You know, we'll be misbehaving. So the higher time frame is going to guide us. So if you look at this, so if you look at this, when wave 5 ended here, price moved down. That's the first move. So the first move, if you look at the internal structure of this first move on the higher time frame, it doesn't look like an Elliott impulsive. It's a 3-wave structure. Well, I think it's 5-wave structure. Look at 1 here, 2, 3, 4, 5. So it's a 5-wave structure. It's a 5-wave structure that came down, which is truly an Elliott, but in a corrective manner. It first came down, which is the first reaction that we saw. A move like this one went back up, this one came back down, and this is like a 4. So this is like 1, 2, 3, 4, and 5, and it ended. So this is the move. Now, what we now saw here, it's a reaction to this. So if we see the first move after the end of a particular trend, we'll see this first move, which is, we'll say, oh, maybe this is the real move now. So which is the first move? And this move against it, which is the second move, will be seen as a correction of this particular first move, a correction. So this will be a wave. We'll take this to be a wave. So because this is the first correction, we'll take this as the A wave. And because this is the A wave, it's better for me to go back to the tip of that A wave. See, when we are doing correction, this wave does not matter. The first wave does not matter. This wave will not tell us where this wave will be. So we don't use this wave. So it's going to end. Once it ends, just click back, click back. So with this wave does not tell us, we don't use this wave to get, or we don't use this wave to get this wave. So after the first move, at the end of the correction of the Elliott, this trend has ended here. So we had a move down. So, and after that move down, which is a new move, then the price went up again. So this price went going up. We look at this and say this is like a wave A. Now, after this wave A came down, then we add another move to the downside. We'll say this is like wave B. This is like wave B. That is how to judge it. This is wave B. This is wave B. And after wave B, we are going to wave C, which is the last wave that we are looking at, wave C. Now, where this wave will end is what we are interested in. So for now, dollar still has some strength. Dollar may be moving very close towards the end of its movement, but dollar still has some strength. That is what I'm trying to tell us now. So, but where will this end and begin to fall? So dollar is still not weak. It may be nearing the end of its move. And that is what we are seeing here. Now, what is important is that this move is a changer that the price first came down, which is an intention for the dollar to go weak. But now, dollar corrected backward as wave A, we're going to see wave B, and we're going to see the end of this C. And after the end of this C, dollar is going to crash and is going to come down. That is what we are telling ourselves now. So at what point will it be weak? Now, the structure in the making, we're going to see if it's a flat, if it's a zigzag. What kind of correction are we seeing in the making here? So how do we see it? How do we see it? So we take this fib, we know where A started and ended. What did B give us in terms of with A? So this is the origin of A, and this is the end of A. So if this is the end of A, so B had given us something like 90. So if it gave us something like 90, that looks like B wave is telling us that, okay, we might be looking at a running flat. We might be looking at a running flat. That is what this has told us, because price went up, then B came back, it never broke the level of A, the origin of A, and it stopped here, which means that this is a flat, a running flat, not just any flat. The fact that it has done 90% retracement before moving back has shown us clearly that we are dealing with what? A running flat. And in a running flat, where will C end? That is what we are telling us. Where will C end? We know that in a running flat, C can be 61.8 fib retrace extension, 100 fib extension, or 123.6 extension. That is what C would do. So, and in our attempt to trade this, we are going to look at those levels when we take out our fib extension tools. And if I take my fib extensions tool out from the origin of A to the end of A, then we now come back to where B actually ended. So we're going to look for 61.8. Now, at the moment, just a bit below the red line is where we have 61.8. Are we going to see reactions here? Are we going to see reaction because the price had already compromise 61.8. Price didn't stop there. So the next place we'll be expecting price to visit should be 100. So which means that we will expect price to visit 100, which is just a bit above the line here. So that is where 100 is. So I can tick in this. So there is a tendency for price to visit 100 before falling, and that is still some movement. But then, having seen that, having seen this, I need something to guide me. I need some important field level to guide me. I don't expect price at 90 again, because this is 90 down here. So if this one is an Elliott, so 61.8 already is breached. So I'll be more interested in what is going to happen here at 76.4. It is not expected. It's expected that price is going to compromise it from what we know. Then we look at the other one, which is 86, 85.4 rather. So 85.4, these are the two levels which I expect, based on what we know, that price will compromise this level. So I will be watching for price action, for pullbacks. Maybe all I can get from these two levels will just be pullback before we reach this place. And if we get a price action here, maybe we'll be coming to the downside. Otherwise, we might continue to go to 123.6. That is how to engage this thing. So with this higher time frame analysis, then the next thing I can now tell myself is that from this analysis, if I say 5, this is wave 5 here, and it's been breached, then I doubt that that is the end of wave 5. Now, what I'm going to do, just wait and see. Now, enlarging this further now, for me to now be able to see the internal architecture of this wave very well on the higher time frame, because when you look at the higher time frame, I think things will fall in places, more in places when you look at the higher time frame. Looking at the higher time frame, the origin here still consigned here, but then this is where I put my 1. Can you see that 2 is not where 2 is supposed to be? You can see 2 is not 2. When we check the lower time frame, 2 was actually resting somewhere. But can you see these candles? 2 is not where we thought 2 would be. Okay. Then if you now look at 3 seems like there's a breach here, and price came down before this move. What is that exactly is happening? 4 seems to be tight. So we have problem with where 3 ended and where 4. Then again, we'll tell ourselves that wave 3 usually is the longest of all the waves. It's longer than 5 and 1. So with that at the back of our mind, we now tell ourselves, when price actually came back down here, this is where price made it down to, this place. And we will say that, should we say that the origin is actually from here? Price made it down here before this move. Is it a corrective wave? No. If you look at the manner the price went up here and came back down, so it has made this initial wave as wave 1 after the move here. This has been wave 1, and this is a correction to wave 2 of the bigger time frame. So the bigger time frame has now given me that, oh, this is likely to be wave 2. So looking at this, once we go off, please, you know that you are going to relog again.